My point of view is slightly different, and all the noble speakers which you had a pleasure to listen before me are well-established VCs with like 15 or 30 years of track records. I'm relatively new in that market. I started running a VC fund just like 5 or 6 years ago, so we are still a relatively new fund on Polish market. We are called the SpeedUp Group. Yes, thank you.
I'll let you actually go on.
Yeah. Please. We are called SpeedUp Group, and we do only early stage tech investments in Poland so far. We've got around 35 companies. I think it's very easy to talk about me, but I just want you to understand that I'm going to share some dilemmas I have today with you. I'm not as convinced as the previous speakers. I've got some dilemmas, and probably you will be able to follow my discoveries today, all right? So the title of the presentation is Searching for Black Swans. So how to create a venture capital funnel in Central and Eastern Europe. And this is the story I want to tell you. It all starts with a prehistoric date, 9th of April of 2012. It's really prehistoric, I know that, 2 years ago. iPhone 5 wasn't even launched, so there is nothing to talk about. But anyway, on April 9th that year, we all were stunned. And the stunned in this occasion is a code word for jealous. Because that day, Facebook bought Instagram for $1 billion. And of course, this is an older example. And after that, of course, there were some more crazy checks were written, like for WhatsApp, $16 billion. But from my perspective, this was something like a lot of friends of mine from different industries called me, come on, man. So these are the checks that people write at your business when it's going to be yours, when it's going to be your first billion-dollar company. So why big checks are important, why big exits are important in this market. Piotr Wilam, in his fantastic presentation, told you his experience of going to Silicon Valley, that what made him really, what really surprised him was the fact that he was, everybody was talking about changing the world, and everybody was talking about $1 billion company. And there is a lot of great idea behind that, but there is a lot of math behind that. I remember my first visit to Silicon Valley, and we were pitching one of our portfolio companies, and I tried to help them to raise the money. We failed, and I've been talking to a few VC companies on Sand Hill Road, and I told them, man, this is a real opportunity. Within the next 18 months, you're going to have $50 million exit. He looked at me and said, don't bother me with that. It's too small. And I couldn't realize that. And big checks are important for one reason. Because from American point of view, venture capital returns comes from big checks only. So most of American seed or early stage VC fund make returns on those big checks on top the side of their portfolio. This is very American experience, but being honest, European is not as well described. So as you could see during the previous presentations, half of the world VC investment is made over 60% is made in America, and 35% is made in Bay Area. So we have to use their data because they do it probably on the most professional way, and it's really well validated, right? So, and of course, without returns, returns for investors, there would be no money for tech startups. You have to understand how the normal fund works. Money in the VC funds come from people called limited partners. These are these people who want not actively invest in startups. They are hiring professional company, professional management team to manage their money by investing in startups. They expect that their money will be given back with a huge upside. Usually they expect that after 5 years, they're going to get 3 times their capital, which means that the returns should be huge, all right? So they don't invest in tech because it's sexy. They don't, Of course it is. But they don't invest in tech because they've watched some kind of Hollywood movies. They invest in tech because of the returns. Money follows the return, follow returns. So if the tech funds will not deliver the returns to the investors, you will never be able to raise another fund. No money, no tech scene. That's why returns are not only important for VCs, it's also important for entrepreneurs. Because the more returns you bring to the fund investors, the more money will flow in the future, all right? So if I may just, Chris told you a little bit about that. This is just a very simple scheme, all right? 50% of early stage fund investment are debt. Everybody in the world says that. I mean, these are American statistics. Of course, the later stage you go, the less debt ratio you have. But if you invest really early, 50% of your investments are debt. Most of the returns are made on 10% of your portfolio, which means that you really earn money on 1 out of 10 companies you invest. This is description of so-called power law distribution. It's like Pareto, but a little bit more. So American experience is like that. I'm searching for one big, huge company which will make the whole return of my fund. So Silicon Valley model is about searching black swans. It was once described by Paul Graham. We are searching for black swans, which are very rare, but if we find them, the returns are huge. What it means to have a black swan company in the fund? It means that if we exit that company we invested, it repays the whole fund. So I'll give you a very short and simple example. Let's assume that you have a 50 million zloty fund. It's a very Polish, it's a middle-sized fund funded by KFK in Poland. So you have a 50 million zloty fund. So you have to give back to your investors 50 million, and you earn money only if there is an upside. Of course, they would expect to have 150 million, and then they share the carry with you. But first of all, you need to give them back 50 millions. All right? So the black swan is the company, a single company from your portfolio, which allows you to repay those 50 millions. All right? Let's assume that average share in portfolio company is 20%, just an assumption, all right? And that means that if you want to give back 50 millions from that one exit, and by having 20% of the company, that means that you have to exit the total valuation of the whole company of 250 million zlotych. That is a black swan for the fund, which is 50 million big, which is relatively small on European size, but it's middle-sized Polish fund. Is the one we have, for instance. So it's important to understand when you pitch early stage fund, the bigger size fund you pitch, the more revenue the more returns they expect, right? So if you pitch a fund like us, we are searching for black swans like that. So company who could reach the valuation at 250 million złotych, which is it a lot or not? What do you think, entrepreneurs? All right, so I'll give you the short example, all right? I've checked the Warsaw Stock Exchange, Giełda Papierów Wartościowych. Of course, these are just the public companies, only those who are listed. It's not the whole market. But how many companies right now on the Giełda Papierów, on Polish, on Warsaw Stock Exchange, listed companies, the valuation is bigger than 250 million zlotych? What's your opinion? No, we are ranked bad. I mean, it's 164 as far as I can remember. Remember, it's 20 years of Polish capitalism, 25. And we've managed to get to 264 such companies who are black swans for a fund like us. So, but this is, of course, the whole industry. How many of those 164 are tech companies on Polish stock exchange. Great, great. It's 10. It's just 10. So it's 20 years of Polish capitalism, and there are just 10 companies who are black swans, as I described them before. Of course, this is just a public market. Of course, the biggest Polish probably exited company, Allegro, has never been public. The rest of the public companies acquired by Naspers has been withdrawn from the stock exchange. But anyway, as you can see, the likability of getting such a black swan is very small. So maybe as a Polish fund, so this is the dilemma of every Polish stage fund, early stage fund. Just some of them don't realize that the dilemma, but they will come up to that and they will have to face it. Oh, fine, they will have to face it. So maybe our approach should be different. Yeah, because there is a simple quotation with few variables. Yeah, if it's so extremely hard to find black swans, so there are few possibilities for early stage up fund. I mean, then you have to lower the risk acceptance, because the Silicon Valley model is about I'm investing in the riskiest possible businesses, searching for one black swan. So maybe just a dilemma. The here Central European model should be let's lower our risk acceptance, and our strategic approach should be lowering the loss ratio. Remember, it's 50%. Maybe, you know, it's a logical, yeah. So, but that makes a VC company an early stage private equity fund, which is nonsense from theoretical point of view. But I think market goes this way. There are a lot of small VC funds, or call themselves VC funds, who are risk aversive, who want to avoid risk, and it's very reasonable. You may complain on them and you may hate them, but it's reasonable from the point of view I have just showed you. So it's very reasonable, right? So this is one way. And of course, remember, VC firms are not about financing innovation. They are about returning the money to the investors. Unfortunately, I know how it sounds, but it's true. I tried to explain you that before. But that approach means that you're going to have a reasonable returns, but we will not support innovation at all, because such a system does not support innovation. Because innovation is risky. It can pay off with a huge upside, but it's risky, and that's the issue, and that's the issue of the innovation. In my opinion, it's not the best model, and I'll explain that a little bit later why it's not the best model. So this is Paul Graham, who sponsors my today's speech, and he said one of the most important things to understand about startup investing is that the best idea look initially like bad ideas. And he said, I've got dozens of years of experience, and startups are the less intuitive part of industry. So if we do only obvious businesses, and when I started to be a professional investor, I went to Silicon Valley and I met one of the famous angel investors, James Clavier, a French guy who lives in Silicon Valley and invested in a lot of companies, and he said to me a sentence which was total shock to me. He said, "The best company are those who are totally senseless." I mean, when people come to you and present you the idea which can never be successful, and their success, these are the biggest companies, like Airbnb, like I don't know, Google, name anyone huge. So Silicon Valley model supports also innovation because they search for one huge ticket, while the previous model I've described wouldn't drive the innovation. I mean, if you run the VC fund, you have to answer the question on which side you want to be, just to deliver the biggest returns to your investors. And if you are an entrepreneur, you should carefully choose the fund and by their portfolio, by their actions, by the talks to them, just to search for the one which fits your idea of the business, because they can be very, very different. By the way, Y Combinator portfolio, I told you about that, that most of the profits come from one or two exits. The total value of Y Combinator companies right now, the valuation is about $10 billion or something. And 76% of that comes from two companies, Airbnb and Dropbox. So out of the dozens they incubated and supported, only two creates the real value for them. So that's the justification of that model. And of course, if you look at Peter Thiel, he was chosen in 2012, I guess, or 2013, the best VC in the Valley. Most of his profits came from Facebook. So this is the American model, right? So either we stick with this, or we go to this model, to searching black swans. And of course, it's up to fund managers which way they choose, but they have to do it carefully and reasonably and deliberately choose one of the paths. This is a key learning from my short story as an investor. And if you won't be able to seek and build those black swans, the money will not go into this business. Nowadays, Polish tech scene is very much driven by EU money. We also have a KFK fund, which is 50% supported by EU money, and this is the only one of the few reasons we've been able to attract private investors. And if we will not be able to deliver private investors extremely good returns, they will never give us, this money will be stopped. That's why I believe we need to search for black swans. Even though it's hard, even though most of them fail, we need to search for the black swans, because that's the only way that we can generate exits and returns for our investors. Once again, return attracts money. How to find and spot those black swans? Of course, it's a great question, and probably I'm spending my life on searching for that answer. But there are just few things I want to tell you from my perspective. First of all, black swans are rarely local. So since the idea of World Wide Web isn't, so most of the black swan company will be either global or at least regional. It is impossible, in my opinion, of course, it is impossible from this place on Earth to create a Google-like business. I'm sorry for giving that example, yeah, but we have to focus on niche businesses. But when you do a niche business, like Piotr Willam gave a fantastic example of UXPin, which is a success because it's been invested by Andreessen Horowitz, but this is a very niche business. But then we have to address niches and try to overtake them globally, or at least in the region. So in my opinion, we have to do niche businesses because we haven't got the power, we haven't got the money, we haven't got the knowledge, we haven't got the reputation to create our own ecosystems. We have to act within acting ecosystems, within Facebook, within what Google offers us, within what Apple offers us. We will not create a new operating system. Sorry, I don't believe that. We have to act within those, creating on niches and try to win them globally. That's the future of that market. This is the only way that can deliver returns. By the way, there is a very nice Polish company called is it a Live Chat? Yeah, they've just went an IPO and their valuation is fantastic, and they really focus on a niche business and they win it globally. And this is the way which should be repeated. And of course, we need to engage global partners. That what Piotr told fantastically. Funds, angels, advisors. We need to make that ecosystem put a little bit of fresh air into the ecosystem. So this is more or less, once again, the sentence which every speech I'm giving that. So going global or at least not staying local, is no longer something nice to have. It's crucial if you want to survive, because in my opinion, copycats are over. If you are a Samwer brother, and read that, just skip that slide because you're gonna laugh at me, but if you are not, copycats are over. I mean, because of the Silicon Valley companies are expanding globally so quickly, like there is no European Pinterest, there is no Polish Pinterest, there will be no. There is one Pinterest, and it spreads globally that quickly that you don't have a chance of doing copycats. But maybe, of course, there are businesses which will stay local, content businesses, those who have a presence on the ground, brick and mortar, those with local copyrights and stuff like that. They exist, and you have to win them market by market. But still, in most of the cases, copycats are over. So you have to think global from the first day if you want to build a black swan. Before I say thank you, even though it's written here, let me sum up what I just told you, right? First of all, I believe we need black swans because the model of low risk, low return companies does not fit to VC money, and will not be, and doing that will not be able to attract private money, which we really need to do, especially those coming from professional investors like pension funds and stuff like that. This is it. We need to search for black swans. To do it, we need to scale businesses more effectively than we've done in the previous years. I just gave you the example. From my perspective, Black Swan is a company who at exit can reach the valuation of 250 million zlotych, which is, I don't know, 70 million euro or something. The bigger fund you have, the bigger valuation they expect. If you go to Silicon Valley VC, he says $1 billion company. If you go to Europe, to a Berlin VC, he's gonna tell you €100 million company. If you come to me, I'm gonna tell you €50 million company. So the bigger fund you pitch, the bigger their expectations are, and it comes from the math, which I have just showed you, right? How to build a big swan? Don't be local. We have to do a niche businesses, and Poland is too small to do a niche businesses, so you need to go either global or at least become strong regional, however you pronounce it, company. Thank you.
Wow, thank you. That was a very smart presentation. I really enjoyed it. We have a couple of minutes because we're running a bit late. Who wants to take a first stab at a question? I see a hand at the very back over there. Yes, thank you. Now I recognize you, but you didn't have the bird last time, so yeah. That's why I'm just not sure. Okay, please just state your name and then
Hi,
go
I'm
ahead.
Kuba. So if Polish companies are supposed to be global from the beginning, do you think they should raise money in Poland? And if yes, what's the benefit of doing so in country?
You shouldn't ask me because we are now competing. My biggest threat as an entrepreneur, I am an entrepreneur, is that, as I told you, you only make money on the top teams. Mark Andreessen says that there are 15 teams in the US a year you make money on. So my biggest threat is that the best Polish entrepreneurs will go and seek money abroad, which is happening, of course. So my advice is build the first traction here with the Polish money, which are relatively easy to win, which are, you get the support, you can do it locally relatively cheap. But then if you want to go global, you should look for the partners abroad, and we are about to help you in this. So this is the funding strategy you should have.
Thank you.
I have time for a second question. Is anyone taking a stab at that one or not? I'm just going to ask you, you kind of mentioned it in your talk, and I said that before as well. And you don't have to answer if that puts you in a bad position. But that money coming from the EU is pretty destructive, I believe, because it actually doesn't help private money to actually come into the game, because when you already have money coming from the EU, if I'm an LP, I'm like, an LP, so someone who invests money in VCs, I'm like, why would I actually go there? Because actually the European Union is already raising the bar to enter the market. So do you think, at some point there will have to be a reversal of that kind of policies from the EU, or?
You know, I won't be objective because we are using the money,
Obviously,
of
I
course,
know.
but
We all are
from-
here, so
from-
that's all right.
From my perspective, I wouldn't find enough private money on the market. And so Winston Churchill says once that democracy is a horrible, but no one invented anything better. So in the Polish market with the money is the same. I mean, the European money have a lot of disadvantages, but we wouldn't be able to cope without it.
Without it, yeah, makes a lot of sense.
So if we will be able to generate return on the EU funding, which is my goal,
Yeah,
then we will attract private money from the entrepreneurs who exited with us. And so this is really about just speeding that
speaking
circle.
that, yeah. But all that, and I think I mentioned that as well, it has also to come partner with easing up regulations as well to,
Yeah, of course,
let you
of
do
course.
more, actually
Of
more
course.
money, otherwise, you know,
Of
it
course.
discourages. Okay, on that, thank you very much.
Thank you.
Thank you. Please applaud him again. Thank you so much.